All right, greetings everybody and welcome back. Thank you for joining me again. Chris here, bringing you another weekly Wednesday discussion. And today we are going to be diving into the history of the Japanese yen. We're going to talk a little bit about the Japanese economy, talk about the currency that their economy revolves around, and we're going to work our way through some charts and take a few looks or talk about a few different things that kind of cause the economy to fluctuate up and down, which in turn causes the value of their currency to fluctuate up and down. And we care because we are traders, and it is something that is available to us in the Forex world or in the futures world, because obviously we can trade yen futures. So without further ado, let's go ahead and dive through our regular scheduled disclaimers as always and be on our way to the juicy material that follows. Remember, not a single word of these has changed. They are exactly the same as always. So if you already know them, then hey, this is a good time to re-up your coffee. But nonetheless, here we go. I'll leave them on screen for a brief period of time, and then we'll be on our way. So, but thank you for joining me yet again, everybody. It is a wonderful Wednesday my way. Beautiful weather outside at the moment. Quite nice indeed. Hopefully you're experiencing the same. I'm only one cup of coffee deep at the moment, folks, so I may not be as overly excited as usual, but we can definitely catch up. Don't worry about that. Been trying this new thing they call water. Doesn't seem to be as enjoyable as coffee though. Moving along. Moving along. Moving along. There we are. Sorry about that. Switch one farther. There we are. Final one. All right, let's go ahead and dive on into it, folks, shall we? So once again, greetings, everybody. If you are just joining us now, a few latecomers popping in the room, it is a pleasure to have you as always. And each and every Wednesday, we like to have something to talk about. We like to come in here and give you something to stimulate your brain, kind of keep it fresh and thinking about something other than just the simple TA that you're doing on your charts or whatever it is that keeps you preoccupied throughout your trading day. It's my job to bring you something, or my goal more or less, to bring you something that kind of pulls you away from the commonplace, kind of brings you to an area where you might be firing a few different brain cells than you're already firing, something along those lines. And that's what we do each and every Wednesday. Something to talk about. And today is a day where we're going to do a bit of an asset spotlight, so to speak. I like to call it asset spotlight because I like to cover a currency, talk about the economy behind that currency, and it is something that is always a tradable currency, so it is definitely relatable to us as traders. And the information that we pull from this definitely can be used as we go forward if we do continue to trade or begin to trade some of the currencies that we are discussing, with today being the Japanese yen. This is a fun one just because it is not like many other currencies out there, in the sense that it has had a very, well, I guess that does make it more like it. I was going to say it has a very tumultuous history, but nonetheless, we are going to just, without further ado, dive right into it. I'm going to give you a proper introduction to the Japanese yen. So the Japanese yen itself is just simply the currency of Japan. So the yen is spelled Y-E-N, as you can see here on the center screen. And we're going to switch on over to charts of the yen futures, and we'll do that. Here we are. There we are. So we're doing that on the Finmark platform at the moment. And if you are looking to follow us along here, folks, all you're going to want to do, it actually is going to be on the drop-down list, just alphabetically, if you don't type anything in. But if you're curious, the futures are just going to be 6J if you are looking to follow along. And I am currently looking at a 1-hour chart of the Japanese yen. And we're going to look at some characteristics of it. We're going to go through it, and we're going to treat it like it's our first time meeting after we talk a little bit about the history as well. I'll talk about some of the things that I like and all that fun stuff there, shall we? But as always, if you have questions, definitely feel free to use the raise the hand button. If I have the time, I will absolutely try to redirect whatever it is I'm talking about to answer what it is you're talking about, and hopefully a bit of a seamless manner. But nonetheless, so the yen itself is, once again, it is the currency of Japan, right? The currency of Japan. Yen literally means circle, all right? So that's a fun fact of the day for you next time you're at trivia. Yen literally means circle or round object, all right? And it has been mirrored towards the Mexican peso with the round shape of its coins, all right? Now, during earlier times, 1 yen used to correspond to 100 sen. But according to many researchers out there, the sen is no longer accepted as a base period of, believing what the yen is really, tied to. And we're going to talk about all that here as we go along. But the yen itself was introduced by the Meiji government, okay? And the yen was used to replace the unstable Edo period system of the Mon currency, where there was no standard of exchange, and that gave us a bit of an issue. Back in the day, there was a currency that obviously had a just kind of a old Western feel to it, where there was no real tie to the rest of the Western world. We didn't have a value for the currency. So before we found our way with the Meiji introduction after the Bretton Woods Agreement, we're going to work our way into that. The currency was kind of a bit of an outlier, so to speak. But then again, which currency was it? Or which currency wasn't across the world? You know what I'm saying? We have a lot of currencies that began their life like that. But things like the pound, which we've talked about before, always seem to have a bit more of a stable backing behind it than you will understand here shortly with the yen. But without further ado or further digression, the New Currency Act of 1871. So in 1871, we saw the officiation of the yen as the Japanese currency in a hope to bring stability to Japan's rocky currency situation of not having a predetermined value based on other things. Now, Japan's objective was to enter the gold standard of currency, and with the signing of the New Currency Act, that is exactly where they ended up. So the stable monetary exchange became a floating exchange, which caused the yen to become a floating currency. The floating nature of the yen caused its overall value to drop. Okay. And many researchers state that the yen ultimately lost its full value during World War II. Japan's currency once found itself within the gold standard, but once the United States dropped their gold standard, which obviously we all know happened around 1971, which, as we talked about before, that's why I'm saying that. But once the United States dropped their gold standard status, surcharges began to be placed on exchange rates and imports from Japan. The Japanese later signed the Smithsonian Agreement to enter a fixed exchange rate in relationship to the US dollar. Now, however, with damaging fluctuations in the supply and demand aspects of the market, the agreement was then dropped. In 1941, the yen was equivalent to $1, and this exchange stayed in effect till 1971, according to various researchers out there. Now, Japanese coins come in 1, 5, 10, 50, 100, and 500 yen pieces, whereas the bills come in 1, 2, 5, and 10,000 yen pieces, with a few more harder to find 2,000 yen options out there, which does exist in similar fashion to maybe the $2 bill in the US. As it does exist, it is still printed at times, but not a lot of us we rarely see them or get excited when we do for whatever reason. Quite silly. But there's a little bit about just kind of the background and the history about the yen in and of itself. Now we're going to kind of move our way, and I'm feeling a little spicy today, and actually spending a lot more time talking about the practical ebbs and flows that kind of characterize the Japanese yen, especially with the futures variation, because that is something that is available to all of us as traders. So we might do that, and I might kind of go off the beaten path here, and instead of just running down the straight history lesson, we might start taking a look at the currency itself that you see on your screen, which once again is the Japanese yen. It is the 6J if you're joining the slide, if you want to go ahead and pull up the currency and you want to pay attention. But there are some nice characteristics just right off the bat that you'll notice with the Japanese yen, and some things that I like myself. And if you are curious, I didn't mention it, but the Japanese yen is definitely a widely traded currency in the world. I believe it is currently third. It is third or fourth, generally speaking, but I believe it is third behind the US dollar, behind the pound, but behind the pound, the US dollar, and the euro. So that, yeah, would make it fourth there. But nonetheless, it is a pair that you definitely should be a little bit aware of, obviously, because it is a big dog. Anything in that top 5 is always going to be something that we should have some type of an interest in. But let's go ahead and just dive into what these futures charts look like. And then we might kind of work our way back to some, a little bit of the history of the yen and all that other good stuff. But without further ado, as you look to the top right here, we're looking at an hourly chart. And there's some cool things going on with the yen that are just readily apparent to anyone that is going to be interested in technical analysis. And I'm pulling out my line tool right now. Let's use ourselves a nice yellow or goldenrod line. We'll use a nice goldenrod line as a nice little appeal here. Right off the bat, what do we see here going on in real time? Once again, this is our current market value because we are on an hourly chart, and this is present day as we go all the way to the right, bringing us right around to where we're currently at. Now, taking a peek here, right around this 0.0093, I drew ourselves a nice goldenrod or yellow line, whatever color you want to call that. Now, why in the world did I do that? Well, I want to highlight some characteristics about the yen that I personally like in my trading environment, and that is support and resistance that is commonly reused. Now, this is something that you will find characteristic on some degree or another across many pairs, but I find that the yen, for whatever reason, in all of my days of Forex trading and then working my way into the futures world, was something that was quite, how do I want to word this? It was always quite consistent in the way that it was directionally favoring, all right? And at the same time, still valued support and resistance heavily. Now, I'm going to elaborate on that because I'm sure that is a little confusing right off the bat. But what I found with the yen in my experience, the yen was a consistent grinder until it would find substantial areas of support or resistance. Meaning, if it was rising, if it was a bullish day, we would find that the bulls were in control, and that we would find that the bulls would continue to stay in control with not a whole lot, relative speaking, of course. Remember, we're talking about relative to other currencies out there like the euro dollar or the Aussie dollar. Aussie dollar would be a great example because the Aussie dollar swings quite a lot more. So we would find that the yen would hold a directional challenge a little bit more so, more consistently, so to speak, than without large abnormal fake out swings than some of the other currencies out there. And this was something that was interesting to me. It was good and it was bad. So when you have a market that is being grindy, for example, if you look at the left side of your screen, if we just focus on the period from, and we'll use blue this time to kind of outline. So from here to here, okay? If we just pay attention to this portion of the market, it's pretty easy to see that for the majority of the market movements here, we were working our way up. Now, something interesting about this, though, it kind of outlines kind of the description that I'm trying to provide, is I would find that the yen very oftentimes, if it was in a bullish day, it would maintain in a bullish day. And it would do this for a long period of time, if not the entire day, where then when the night session came around, when we worked our way around, we might have a different change at that point. But we had long periods where the bulls or the bears were able to continue grinding without real heavy swings, relative speaking, up or down, that kind of made it seem like the trend was changing. It was a consistent grinder, which made it a very strong pair for me to ride with trailing stops. I enjoyed riding the yen with trailing stops, where I did not enjoy riding some other pairs, the pound dollar, for example, and the Aussie dollar, for example, in my Forex days. I was not as much of a fan running the trailing stop option. I was more I was more favoring at times just setting that take profit, setting that stop loss, or just modifying it and doing it manually as I was going along, because the swings were not so because the swings were more dramatic with the other pairs in relation to the yen. The yen kind of opened up a new world for me in the trailing stop world by allowing me to continue to follow a currency with a lot less a lot less fear that I was about to be entering another hard swing down, even though the overall swing might be going along. And that is something that I always found, quite enjoyable about the yen. Its consistency to whatever direction it was trying to go. And that's up or down. I'm not saying the yen rises forever, and I'm not saying it falls forever, but when it is rising, it does like to rise at a somewhat consistent and steady rate. And when it is falling, it does like to fall at a somewhat consistent and steady rate. Now, once again, this is all relative, obviously, to other currencies out there, and this is my subjective opinion to it, but this is what I found, and it treated me well. It allowed me to hold on to positions longer than I might be willing to hold on to another position, because it became apparent when the market was falling with the yen, it became apparent that the market was falling because just like it had risen, when it would fall, it would continue to fall. Instead of just having a simple pullback, if it was anything more than a pullback, there was a good chance that we were going to witness something a little bit longer. And this is something that I liked a lot with the yen. So just sharing some of my personal taste with it. And the other thing that I like a lot with the yen is its willingness, despite the grind, to enter into consolidation periods where it would find a valuable area of support or resistance, as you can see here by the gold line on the right in current time, where it would find a valuable area and it would use it from both sides of the coin and provided a whole lot of entry opportunities for scalping. Okay, now once again, I'm talking about for scalping for the short term. These areas were quite enjoyable to me. Okay, they were quite enjoyable indeed, to say the least. And what I mean by that is, if I just took a bird's eye view on the market, it didn't matter what chart I was trading. For example, right now we're looking at an hourly chart, and I just looked at the period where the accumulation began to take us to an area where we began to consolidate, or an area where we began to find basically some type of equilibrium in the market. And that's what the market's always looking for, right? It's looking for equilibrium. It's looking for the buyers and the sellers to balance out, and it's trying to do so in a manner where, once again, if they do equal out, the market's going to go sideways, right? If you have the same amount of buying as you have the selling, you're not going to be going up and you're not going to be going down. And that's what we run into a lot with the yen when it does begin to find its strong areas of resistance or support. You'll find it hit a wall and then travel underneath that wall. And then generally quickly thereafter, you'll see if the wall has been found, there is a very well-defined period of selling that will, reject it away from that wall, and it'll generally come back and test a couple times and then continue to repeat in that manner. But what made this nice is the very clear, well-defined levels that it created. If we saw the market getting all this congestion, as you can see, and we'll just kind of box it off here. Let's see. Do the nice light pink box height this draws. There we are. So in this area here, switch back. There she goes. Okay. So this little red box area here, all right, this is a very clear area where the market found all kinds of congestion and the selling pressure began to find a stronger foothold in the market than the buyers were able to achieve, albeit temporarily, because we are looking at an hourly chart. But for quite a few hours, the market did try to break through this. And we had one push that pushed us up to 0.0093, give or take. And once again, if we want to go out far out, 93340. But nonetheless, we didn't successfully close beyond. We didn't successfully begin trading beyond this area, but instead we found a lot of congestion. And this stuff kind of stands out like a sore thumb. And the reason it does is you'll start to see all these long wicks with the yen. You'll start to see all these long wicks. You'll see little pin bars, all kinds of things going on back and forth that indicate there's a strong bit of selling pressure going on somewhere up here near the top, and the buyers below aren't having the strength to move beyond, indicated by the long shadow on the candle body, long wick, whatever you know it to be. And as such, it kind of becomes, readily apparent where these walls in the market are, where all of these footholds in the market are. And something that the yen does that I like a lot is when the market is able to push through one of these areas, when it's able to push through one of these areas where we have a strong period of selling or just a lot of orders waiting to be filled that keep shutting the market back down and sending it right back down and not having the ability to go on. If the market, for whatever reason, is able to gobble up those orders and get on top of that area, we see a surge where we then see a lot of orders flip the opposite direction. And in turn, what ends up happening is we get something like this to the right. So let's get ourselves a green box and watch what happens when we go. Hold on a second. Getting a little glitch here because I'm trying to highlight my, there we are. There you go. So when we look to the right and we, same exact box size, what are we met with? Well, we're met with an area where finally when the market was able to have a clear and concise breakthrough followed by this big, long, almost doji style candle here. And I'll zoom that in just to make it a little easier on your eyes. So what I'm talking about is this candle here that has a wick on both the bottom and the underside. The wick on the underside is longer than the candle before it, and the wick on the top side is longer than everything else around it for quite some time. And actually, as a matter of fact, it was a new high in general, even comparatively speaking to this large body over here on the left. So very symbolic indeed. Obviously, a strong sign for the bulls. But nonetheless, with this candle, we were able to blow above the area of congestion that the market was being stuck at, where all those orders were waiting for us. And what then happened? Well, because we got on the other side of that, all of those orders that perhaps weren't given a chance to go ahead and fulfill the selling desire that they so choose, they just simply flipped long. Okay, so when wrong, flip long, right? That was the mentality that was used here. And you see this happen a lot with the yen. When these big areas of congestion are broken, they generally become strong areas where we can look for a scalp. If we're looking on the shorter term, it could be used to find or justify a long-term position as well if we're looking on something a bit higher. But currently, we are just, once again, looking at an hourly chart here. A little bit more than a 15-minute, but nonetheless, I would still justify looking for scalps off of an area where we're kind of magnetized to the congestion. And we would find opportunities where we could get in for a very reasonable attack, meaning we could look for any type of long in the situation where I'm trying to jump in somewhere close with the gold being somewhere around the gold line, obviously trying to get in as close to the congestion period, the previous congestion period as possible, look for that long opportunity. And ideally, there's a few ways to go about setting a stop loss with areas like this. We can look for the last swing low that was created before the break through the area of congestion. And that theoretically would actually be right around this area here. We had a temporary swing low. Now, this doesn't look like it because I'm on an hourly chart, but if we broke it down and I switch back over to a 15-minute, you actually would have a bit of a swing low that was created right around this area here. So we kind of swing low around this period before setting a new low in relation to the candles before it, in relation to the trading before it, before we dipped down and blew our way up. So the reason that this is symbolic to me is because a move beyond this point is something that I'm going to consider to be a very bearish event, right? That's going to be, for the market to drop below the support that was created in order for it to break through the congestion, that in and of itself is symbolic of something being very bearish. So by that logic in and of itself, setting a stop loss just below this area, meaning if the market were to fall below this area, I want to get the heck out of the market, that would make an awful lot of sense. Now, there's other ways to do it as well. We could simply do it that way, which is logical, defined. And in order for setting a take profit, well, how are we going to do that? Well, that is going to be quite simply one of two ways. We can look to the left on the chart. We can look to the left on the chart and look for an opportunity that was already reached and go just below the high of something that was already reached. But in this case, because we're kind of in uncharted territory, so to speak, we're kind of way up here on the market. We didn't have any highs around this area until we got here. We're in unprecedented territory for the day. We can also do the easier route and adhere to a money management strategy that we're employing, and that would do us just fine, or that would do me just fine in a lot of my experiences in the past as well, even if I wanted to take it in the most simplistic nature. So that means if I have an area here, right, and this is going to simply just be my locked in stop loss. I know that I'm going to be just setting it just outside. I can just double that zone and lock in my 2-to-1 reward to risk ratio by setting my take profit, and it would look something like that. Now it's a rough eyeball. It actually probably might be a little lower than that. It'd probably be a little bit closer to that. But nonetheless, so just paying attention to areas of congestion and the flip that occurred and the way that the yen was characteristic to kind of hold on to these areas was something that I found very enjoyable to myself when I was trading the yen. It's something that gave me opportunities on, I would say, a daily basis, generally speaking. Now, depending on how far down the time frame you go, you can obviously find more entry opportunities, but the reliability of those areas is going to start to get a little bit more questionable. But what I used to prefer is exactly what I'm showing you guys here. I would go from the 15 minutes, the 15-minute charts that is, to the hourly charts, and I would use these to give myself a good view of congestion areas, with the hourlies making it the most apparent where the congestion was. On certain days, I had to go to a lower time frame when the market was really moving and not holding areas for too long to be able to find smaller scalp areas. And naturally, on a smaller area, smaller time frame, our risk is, of course, going to be lower, and our take profit is also going to be lower. We just obviously scale back. But the idea was stepping backwards with the yen, finding out the general direction, and trying to favor that. And one of the ways that was very reliable for myself to do that was to pay attention to the predetermined trend when I was looking for these areas of congestion. So just stepping through it, I actually have an entire trading process more or less laid out for those of you that just kind of are astute to what's going on. So anywho, so basically, if I analyze the market on the left here, as we went through, step one was to figure out what is the predetermined trend of the market today. And the predetermined trend of the market was obviously one of a bullish nature. We were watching the buyers steadily grind the market upward. And assuming I never found an entry opportunity over here, even though there are quite a few that we can, there are a few that we could definitely talk about. As we worked our way, say we joined the market at this point in time over here on the right, where we are finding a bit more activity because we're working through the US Open. As we saw the market begin to build congestion, we know the market is looking for bullish activity, or we knew the market was looking for bullish activity before that. We can do a couple things. Instead of looking for a short opportunity off of this and trying to anticipate the reversal to come, we can play it the safer route in my mind. And the safer route in my mind is to go with the pre-existing trend once the break occurs. So once we see this red box occur, which once again, I just drew it myself. It's no problem. We can draw those on the fly if it makes it easier for our eyes. But once we see this congestion period occur and the market starts repeatedly rejecting from us something like this, where we find resistance, the sellers are seemingly hitting a wall. But this is our sign that we have a break coming. At the same time, when we look down here, and we're going to use a bright green line. Use a bright green line right around here. Okay. So what was going on around this period? While we were going through this area, we blew through initially, came back down, set a nice high. But what was interesting is these swing lows that were being created on this bottom end. Okay. While we're almost forming like a bit of an M formation here, these swing lows weren't doing anything that gave us any indication that the market was really actually going to push any lower, because they were actually dropping and being very, very consistent with how low the swing lows were falling. We didn't really have any exaggerated wicks beyond this area. This is an indication that even though the sellers are winning up here at the moment, the buyers are definitely still here, and they're willing to let a little bit of fluctuation happen. And this is the story that is being told by the market. And this is something that was very characteristic of the yen, which is once again why we're going over this. But we found ourselves in a position where the sellers were saying, okay, we're going to hold you off here and we're going to shut the market down. And this would scare people into selling, and it would cause the market to fall temporarily. But that is not paying attention to everything before it. And there was a lot of buying that was going on before it, a lot of consistent buying that actually got quite a lot stronger leading into this period, which is what very well could have led to the temporary correction. And this is characteristic of what a correction would look like. The market picked up a little bit too much steam. It had been buying for a long period of time, and then it only increased speed over here. A very strong, consistent, and sudden explosion of buying occurred as we worked our way here towards the earlier hours. And then we had our correction where we fell back down. But overall, the trajectory, as you can see by this bottom arrow here, if we were to use that like a trend line, which it's not, but I'm going to use it as one. Hold on here. If we use this as a trend line and we just kind of go here, ooh, she's glitching out. That's fun. That's kind of messing my eyes up. All right, maybe we won't use it as a trend line and I'll just draw a new one. So if we use it as a trend line like this, look what we have. So we have a deviation here, all right? We started working our way up around this angle. We can call it like 120 degree angle, what have you, just some kind of obtuse, weird triangle going on here. But we've got ourselves a nice bullish incline, working our way up here. And as we kind of worked our way up here, we watched ourselves take off. Boom, we bounced up off of our trend line, the angle that we were continuously finding support along the steady climb up, and we started going up a little bit too fast, naturally leading to a correction. But that doesn't mean that none of this is no longer valid. It just means that the sellers are looking to set up an opportunity for us to get a lower, better value option. It's giving us value. As traders, we're always hunting for value. We want to get in when the market is rising to go upwards, right? We want to ride the market upwards. That's always our goal if the market is rising. If the market is falling, we always want to take advantage of that and we want to ride the market downward. But where we get in is going to determine whether or not we're actually profiting with an overall direction. So these downswings are what we get excited for because they let us get in with hindsight, and hindsight can be very valuable to us as a trader because they let us get in after we already witnessed a strong growth and buying pressure in the market, while also letting us get in at a lower price, while also letting us get in while the market is showing that the buyers are still here. And this was our hint 1 and 2. Okay, these two heavy swing lows, and we actually had an initial period here. If you look on the left where we initially, whoops, I drew an arrow, ignore that arrow. There it is. Sorry about that. Where we had an initial period where we found some resistance, broke through it, found support on it, immediately back tested this area. This was our foreshadowing to keep an eye out for this area, not generally an entry location, except if it was on a smaller time frame. This would just be a condensed version. If we zoomed into a 5-minute chart, this whole situation here, right here where we found resistance and then back tested for support would look like this area on the right. If we zoomed in and turned that into multiple, quite a lot more candles on a smaller time frame, the pattern just repeats itself over and over and over again, scales in, scales out, just looks different depending on which time frame you're on. But the way the pattern progresses is always the same. We generally will find ourselves in a period where we're finding some type of resistance, breaking through, usually back testing this area to confirm whether or not we're going to hold it. Whether that happens in one candle or multiple candles is going to just be dependent on which time frame you're looking at of that event. So we came back down, found support, worked our way back up, found resistance, and came back down. And what do you know? The area that was back tested initially said, hey, remember me? I'm back. We found support, worked our way back up, got stuck, and actually got pegged in this area for even longer. This is an indication that the buyers are getting quite strong here, and they're saying, we're going for the break. The sellers did not let it happen at that point, but it is a shift in the seesaw. We're starting to see the buyers fight back at a rate where we're anticipating that seesaw to finally be going up and not down. And as it came down for the last time, this was the opportunity here where a lot of traders said, all right, we're going for it. We're anticipating the break. They start jumping in. The market starts rising yet again. And we have a little bit of hesitation as we get closer to this area because people saw the resistance that happened on the last 2 swing highs here. We rejected, came back down, worked our way back up. And then this was when all the magic happened. All those buyers that got in said, we're not getting scared. We're not getting out. And if anything, we're only going to be buying harder when it starts breaking through. And she broke through. So what we're given here is a situation where to get in for an entry, to turn this into a trading strategy with the characteristics that I like with the dollar yen, I just analyze the predetermined trend. I analyze the predetermined trend of the day or the time frame that is relevant to me trading. If I'm trading on an hourly chart, if I'm trying to do some type of, obviously some type of day trading with the dollar yen, I want to know what the trend is for the day and the day previous, the day prior. I want to pay attention to what's going on here. What is the momentum going into the time frame that I'm interested in trading? And if it is overwhelmingly bullish, then I'm only going to be looking for bullish opportunities if I'm trying to do what I am talking about here. Okay, if I'm just trying to take the easy green, if you will. And that means I'm only going to be looking for the buying opportunities, which means I'm looking for congestion. So step 1 is analyze the predetermined trend, right? Analyze the predetermined trend. What are we in? Are we in a bull market? Are we in a bear market? We're in a bull market. Okay, good. So step 2 means we're going to be looking for an opportunity to buy. So how are we going to find that opportunity to buy? We're going to wait for congestion to be found on the way up, okay? Boom, found congestion on the way up. All right. So step 2 is complete. We found congestion on the way up. Does that mean we buy right away? No, it does not. No, it does not. Step 3, all right, look for support to be built underneath that congestion. All right. Step 3 occurred right here, and I'm going to make it a gold box. There we go. So this is step 3. All right. All right. So these blue lines theoretically step 1. All right, because that's analyzing the overall trend. This red box was step 2. The gold box, step 3, because we have now found support that is being built underneath an area of congestion, underneath an area of resistance, and then the market continued to work its way up off of this. And once again, here comes step 4, which is the money box, which is going to be the green box here on the right. And what is the money box? We wait for the break to happen, and we ride in direction of the trend, with using the previous swing low that caused the break to happen, the support that gave the market the ability to break through and set a new high. That's what we're looking for, which was right here. Okay, this was the last swing low, even though once again, it might not look it because we're on an hourly chart, but let's see what happens here if we switch ourselves over. Hopefully it doesn't Google up all of my drawings here. If it does, it'll be quite sad. Okay. There we are. It looks a little bit better. Perhaps let me zoom ourselves out here. All right. I'm drawing boxes left and right. Oh boy. Doesn't matter how long you've been doing it, folks. Technology will always find a way to defeat you and when it matters most. There we go. So anyway, backing our way out here, not trying to go away. We don't need an order tick at the moment. We are just trying to use a demonstration here. There we go. Beautiful. So the green box came at step 4. Step 4 is obviously when our entry is coming. So step 1 is analyze the trend. Step 2 is wait for congestion to happen. And on a smaller time frame, this is what the congestion looks. This is why perspective is everything. But look how beautiful the support was down here at step 3. Once again, step 3 was wait for support to build under the congestion. And that was in the gold box. It was almost to the tick down here that it continued to build at an area that was previously resistance over and over and over again. The market likes to recycle these areas. And when we give ourselves a bird's eye view, it becomes quite simple to pay attention to, quite simple to identify. And someone could argue that there are a lot of scalping opportunities on the micro level off of this, and that is true, but that's not what we're talking about. We're talking about the easier green. We're talking about paying attention to the overall trend, riding the break that occurs in direction of the overall trend, which is step 1, identify that trend. Step 2, look for that congestion. Step 3, look for the support to be built under that congestion. And then finally, step 4, when the entry comes, we're waiting for the break of that congestion, which looks something just like this. So this is obviously going to be very, very characteristic here. If you try to, I'm trying to keep it all on the screen. That's why the charts are small at the moment, guys. But if you look to the left where we have our initial step one phase where all this congestion occurred, if you look at all this stuff going on over here, it was very, very stuck, very stuck. Where did price flow? With the absence of this weird freaky candle where we had a heavy gap here, obviously, between an open and close, that doesn't, disregard the, obviously the gap candle, not characteristic of what we're talking about, but still just take everything in stride. What is the majority of what's happening here? The majority of what's happening here is congestion. The majority of what's happening here is rejection. And what does this look like? This, on the right side where the green box is, does not look like this. Okay, if we're trying to color in the lines, one on the left is mostly staying in the red box and falling below, whereas on the green box, we're mostly going above. All right, it doesn't take anybody that's been trading for a long time to see that price is high here and price is stuck here. So once we have our break and our immediate back test, which has occurred here, we had a couple tests of resistance before we passed through, final test anyway, passed through, immediately came back down, back tested this area, found support and continued higher. The moment we find support after coming down to this area on the micro time frame, this is a trigger point for me, okay? This is a trigger point for me on the micro time frame because we have now tested the support that was previously resistance for a long period of time. I want to jump in here for my long, and I'm going to set my stop loss just below a recent swing low. And a recent swing low is going to be right somewhere around this 92735. Somewhere around this area and beyond is where we had this last swing low, which was this big dip in this candle here before gaining the strength to go higher. That means we can look for a 2-to-1 in this scenario and look for an opportunity to jump up for that profit while also having a logical stop loss based on if the market is able to fall here, then we're going to be in a scenario where we're anticipating more selling pressure to be going on. And that's where we'd be looking for a long, which is in agreement with the overall trend, the overall bull market that we had initially analyzed with a logical, controlled, and relatively small stop, so to speak, on the bigger picture. Obviously, looking for a ride to go upwards. And if we just don't even want to do any more any more TA, any more technical analysis on why and where our take profit level needs to be, if we are going for a locked in rate, because that's what our money management, our bankroll management plan says. If it says we will never take a trade that is worse than 2-to-1, then that is already predetermined that we need to go for 2 to make this worth it. And if we do that, and if I do this and I do this blindly, well, guess what, guys? I'm going to lock myself into a scenario where I'm only going for 2-to-1s, which once again, as traders, why is that good for us? Because it substantially lowers our hit requirement in order to be hitting in the green, hitting in the profit, okay? If every time we trade, our position cannot risk more than what it makes every time it is successful, meaning every time it hits a take profit level, and we're always locked into that 2-to-1, we don't have to be as nearly as accurate as if we were going for 1-to-1, right? And that's huge. So that's what makes trading possible. That is what makes trading feasible. That's what makes it doable. And that's how we do it. It's not so much with being an exact forecaster every single time of the week. You will never be accurate every single time on the bigger picture. There's going to be times where you might streak, you might have a nice win, you might ride it out, you might continue to win for, you might win 20 trades in a row one day. You might win them all in a row. But guess what, guys? You're not always going to win every trade. It doesn't matter who you are. And anybody that says they do is not telling you the truth. All right, that's a telltale sign of somebody that's kind of fibbing out there. And but I'm here to tell you firsthand that you do not need to win every trade in order to see that account grow. But you do need to control and have a battle plan and have a logical and mathematical reason for why that account can grow. But nonetheless, kind of a side lesson on money management. But let's switch back to the hourly because these 5 minutes are kind of bugging my eyes out a little bit. There we are. Boop, 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 boop. Much prettier view of what was going on here. So nonetheless, that would be a logical way that I used to execute all the time when I was Forex trading with the dollar yen based on how it is characteristic using present charts. And I actually was going to go a little bit deeper into the history of the dollar yen. And I got too deep into the technical analysis. I'm sorry about that. We might have to talk about some history at another point. Someone said I joined very late and was wondering if I can can replay the webinar after the webinar. It's all of these weekly Wednesday discussions that we do together, guys. I record all of them and then upload them so you guys can watch them back at any point in time. That way, if I don't expect you to always be uninterrupted while we're here. If your doorbell rings or you get a phone call or something along those lines and you miss like 5-10 minutes or something, and it's a crucial 5 or 10 minutes, then guess what? When in doubt, you're not worried. Or don't worry, I'm sorry, because I will have the entire thing uploaded. But I do like when you guys are here, obviously in person, because then you can ask questions and we can gear it more towards what you're interested in at the moment. After the fact, in the recording, there's no way for me to answer your question because it's a recording. Whereas I'm here live now, right? Pretty simple concept, I suppose. But anyway, I did want to go a little bit deeper into the history of the Japanese economy and the Japanese currency, because it is actually very, very interesting, at least to me. I like going into the history of a lot of economy, just a lot of world economies in general. It's a lot of fun. I definitely got myself quite deep down the rabbit hole there with a trading strategy that I used to implement, a very simplistic trading strategy, but a very reliable trading strategy that I used to implement while trading the dollar yen. So hopefully you guys appreciate that, because that is actually something very practical that can definitely be employed. But nonetheless, the short synopsis to take away, strategies that revolve around consistency in current direction with the dollar yen are the ones that I personally found most value and reliability in. Okay. Whereas other currency pairs out there, once again, like the pound dollar and the Aussie dollar, you see very hard swings that made scalping and reversal opportunities quite strong. The dollar yen was one that I always like to wait for a continuous breakout. And when I say continuous, I mean the market's rising. I'm waiting for it to hit a wall and then break through that wall and then continue to jump in for another, what I found to be a very comfortable opportunity to get in a controlled risk reward environment. So those are things that I liked about the dollar yen. And as you zoom backwards, and I will go ahead and get rid of our little scenario here. And once again, these were live charts. This wasn't planned out ahead of time. This is currently, literally, this is the dollar yen on an hourly chart on today's date of March 4th, 2020. Just taking a peek at what we've got going on here. But let's go ahead and get rid of some of this stuff, and I'll actually back out down the charts and hopefully show you guys some more examples in terms of, just briefly, we're not going to nearly have enough time to go through something like that all over again. But as we move, these are characteristics that I liked about the yen. This is one right here. So what do we have here? Okay. If it gives me a red block. All right. What is this? What is this? It's a period of selling, right? But what is it though? It's a very consistent period of selling. I like that. I like that. This falls in play with the stuff that I'm talking about with the stop loss. If I wanted to get in for one of those 2-to-1 positions, something along those lines, and I wanted to take, say I got in with 3 contracts, folks. Say I got in with 3 contracts. And I go ahead and take 2 contracts out when I hit my 2-to-1. I guarantee myself the profit. That third one, I can move the stop loss to where? Well, I can move it to either break even and let that bad boy run and take it out manually. Or I can just move it to a trailing stop and let that bad boy run and see where it takes me. And these are the scenarios where things like that can turn into gold mines for you, because why? Theoretically, if the market were to stay so steady like this and continue falling, there's very little pullback happening along the way. And this is one of the characteristics I like about the yen. When it goes, it goes. When it's falling, it is falling. It doesn't give you a whole lot of wishy-washy issues along the moves. When the moves are happening, the moves are happening. When it's going up, it's going up. That's something that I like, and this is characteristic of the yen, and this is why that strategy that I was talking about can be quite valuable indeed. Taking advantage of stuff like that, like leaving a runner on and trailing stops and all that good stuff. But as we move along, what do we have here? All right, let's take a look at this and talk about this. What happened during this period? Okay, well, what happened? This could be quantified as when it goes as well. Why? Because the market's not going anywhere. The market at this period of time was going sideways. We didn't have a whole lot of activity. We didn't travel strongly up. We didn't travel strongly down. But what did it do? It committed to what it wanted to do. It committed to what it was doing. That's what I like about the yen. When it commits to falling, it commits to falling. You've got a strong period of falling. It's very, very clear what the market is trying to do. Here, the market was trying to go sideways. The market went sideways, okay? You had a period where the market was moving along sideways. It didn't trick you out a whole whole lot. There wasn't a whole lot of fake outs, with the exception of this big bearish fall off that we had here. This is still wild. And if we had waited for any kind of confirmation, which never ever happened, then we would have been in a scenario where we would have really kind of been avoiding any problematic situations. But what's worth mentioning about this is even during this period where we found a lot of sideways movement activity, when we really zoom it in, and it's hard for me to, oops, sorry, I'm drawing boxes all over the place. When we really zoom it in and take a peek here during this period of sideways movement activity, what did we have right here after we did have that period of fall off? What occurred here? Okay. Well, we had a period where, once again, we were finding support and congestion around this area, and we had temporarily flipped to the underside with an immediate back test and a short-term drop thereafter. Okay, so on a micro level, this actually repeated the pattern. If we were to zoom this into a 5-minute chart, you would actually see the pattern that we talked about for the first good portion of our session here today. You would see that pattern repeating itself. We had a break of an area that was tested as support over and over and over again, with a quick retest afterwards, followed by a substantial drop down, which would have been something that could have given us a stop loss. And once again, on a micro level, this actually would have been, let me zoom it in, I'll show you. On a micro level, we actually had a small swing high that occurred right here. So if we wanted to use that as a stop loss level, which would have looked something like, let's use red for stop loss. If we set a stop loss level, something like that, and once again, if we were to just adhere to a 2-to-1 with, just once again, this is just a very basic way to just give us a quick take profit level. It would probably be right around there. Actually might be a little bit lower than that, but roughly 2-to-1 would give us a scenario here where, once again, we would have a logical reason to jump in for short, aiming for somewhere around the gold line as an entry point, stop loss just above just at the red, which is just above that last swing high, with a take profit just being double that distance. So there's a lot of opportunities here for this pattern to present itself on the yen. And this is something that can be done on other currencies as well, but it was something that excelled well on the yen. It was just kind of characteristic of how it likes to trade. And as you continue to go through the charts, I can go all day and show you examples all day long of when the yen commits to what it wants to do. Okay, what do we have here? Another period where the yen committed to what it wanted to do. There we are. The yen committed to what it wanted to do. Okay, and this temporary swing up here, once again, is more of the uncharacteristic swings of the yen, but nonetheless, we still have a very clear, concise movement here, and there's nothing about this in and of itself standing alone that indicates the market has 100% even tried to begin a strong reversal yet. So it's really nothing but a scare tactic along the way. But regardless, indeed, it has been a pleasure, folks, and this has been we'll open with an introduction and brief history about the yen, and then turn into a practical application of the yen. So we took a little bit of a turn there, but hopefully you enjoyed it, and you might be able to use some of those trading strategies in your personal trading as you go along, and let me know how they work out for you. As always, guys, if you do things with a practical, controlled manner, there's a good chance you're going to enjoy what you are doing once again. But nonetheless, I will see you all very soon. Everybody, have a good rest of your day. Happy Wednesday, everybody. Cheers, everyone. This has been another weekly Wednesday discussion, guys, and I'll see you all on the next one. Over and out.